Hello everyone, thank you so much for joining us once again. Today I have my wonderful co-worker Jack Carter with me from our affiliation department. Hello Jack.
Hello everybody, it's a pleasure to be here today.
Amazing. So Jack, today I want us to go through the Q&A regarding affiliation. So let's get started.
Let's go for it.
Amazing. So Jack, I want you to tell me what is an affiliate exactly and how does it work?
Now, basically an affiliate is someone with an online presence, maybe a website or social media that could refer potential clients to our company to trade.
Okay.
That's essentially affiliate.
Amazing. Easy, right?
Very easy.
So the next question is, what kind of requirements do you need as an experienced affiliate and as an inexperienced affiliate to start?
Well, for an experienced affiliate, of course, they already have all the tools necessary. They have the website and obviously the online presence needed. But we have additional marketing tools for them, such as banners and landing pages to assist them further in their course as an experienced affiliate. Now, for new affiliates coming in, we offer one-on-one guidance to help them to explain more about SEO, PPC, SEM campaigns, and just to basically assist them along their way and on their journey on becoming a better affiliate.
Okay, amazing. And now, I want to know, do you actually need experience in affiliated marketing or Forex?
No, not necessarily. You don't need to be a professional to join our affiliate program or to become an affiliate at all. All you need to have is the medium to promote. Social media like Facebook, Instagram, even Telegram and WhatsApp, or a website. If you have this, then you can become an affiliate.
Okay, that's amazing. So you can literally start from scratch when it comes to affiliation. You don't necessarily need a website.
No, it can just be an Instagram page or a Telegram group, anything like that. If you just have an online presence at all, then you can start to become an affiliate.
All right. I mean, especially today when social media is so strong, I think that's a very good point. We have a lot of influencers that could actually become affiliates, right?
Of course. Yes, exactly.
That's amazing. So let's say someone gets started as an affiliate. How does it work? How do they refer clients to us?
Very good question. So if you do have, let's say, for example, a website or a blog, you can access our marketing tools and you can choose various banners for various promotions that we offer or specific markets that we offer as well. And there are also specific links or landing pages that you could use to target your audience with for whatever they want to do or whatever they want to trade.
Okay, and a question that I think everyone wants to know is, how do they get paid? What kind of payouts do we offer?
That's also a good question. Now, we offer a large amount of commission plans. Okay, so we have the CPA payments or the tiered CPA as well. First-time deposit commissions, hybrid plans, rebates, revenue share. We have a whole host of different plans that can be also integrated together for hybrid deals as well. We're just very flexible with these plans.
So perfect, Jack. I think we covered the most frequently asked question. Now I want to see your point of view. Like, is there something that you would say to potential affiliates out there that want to get started but they're not sure, and why should they get started with IronFX and not any other broker in the industry?
What I would say is, if you do have an online presence and you think you're capable of doing it, then don't hesitate, give it a try. It might turn into something big for you, because we offer the one-on-one guidance, competitive schemes, and a heap of marketing tools that can help you. We can help you go on the long run and become a successful affiliate. Because we're very flexible with the commissions as well, obviously this will give you a boost in your marketing. So here at IronFX, we're here to help you become more successful. Simple as that.
Amazing. And as I always say, we have these walkthroughs to help you guys. If you have any more questions, you can always contact our support team by emailing us, or you can chat with us on the live chat support. And thank you so much for tuning in. Thank you, Jack, for this extremely helpful walkthrough. I'm sure that this will help a lot of potential affiliates out there.
Today we will look at the FX market, provide a definition and discuss the times you could trade Forex. So what is the FX market? FX or Forex is an acronym and it stands for foreign exchange. The FX market is a market where you can trade or if you prefer exchange currencies. It is an over-the-counter market and it's a decentralized market with no actual physical central exchange. Thus, it is an over-the-counter market. It's open 24 hours a day, 5 days a week and closes on weekends from midnight Friday until Sunday at midnight. The typical Forex day is being split into 3 main sessions. We make a start with the Asian session, which starts around midnight GMT +2, with the Sydney and Tokyo being open. This carries us through until the European session, which begins at around 9 o'clock in the morning when Frankfurt and a bit later London open. Later on, the American session begins as the New York Stock Exchange opens, which carries us through until midnight when the next Asian session is to start. It's the world's biggest market and it's characteristic that in the past years the FX market has a daily turnover of around $6.6 trillion US. Imagine what trading opportunities occur when the $6.6 trillion exchange hands each day. So who actually participates in the FX market and is able to create such a huge daily turnover volume? Well, the first category includes governments and central banks. National governments and central banks interfere in the FX market either to strengthen or to weaken their currency by buying it or selling it respectively and to readjust their foreign exchange reserves. The second category includes commercial banks and other financial institutions which attend to foreign exchange needs for their customers. For example, for imports and exports and for small-scale transactions with other banks. The third category includes companies repatriating profits. Say, for example, Toyota has a factory in the UK and at the end of the year it wants to repatriate the profits of the year back to the mother company in Japan. It will have to go through the FX market to be able to convert the gains made in pounds to Japanese yens in order to send back home. The fourth category is investors buying assets in foreign countries. For instance, if a European investor wants to invest in a US stock exchange, he or she will have to change his euros into US dollars to be able to invest in anything in the US. The fifth category is speculators. Please note that speculation is the practice of engaging in risky financial transactions in order to profit from short-term fluctuations in the market value of a tradable financial instrument. Last but not least, tourists and travelers. On an individual basis, tourists do not have the same impact on the market, but at certain points, time-specific tendencies in the tourism industry could overspill in the FX market. Say, for example, in the summer months, if UK citizens want to spend their vacation in Southern Europe in countries like Portugal, Spain, south of France, Italy, Greece, Cyprus and Malta, they will have to exchange their UK pounds into euros in order to spend during their vacation. So this should be taken into account since there are millions of tourists. We hope that we were able to portray some of the key categories, albeit we're certain that more exist.
Hello everyone, my name is Emily and welcome to our daily trading tips. So how do you trade economic events? Some days, some events will give the trader a small window to act through, and that's going to be it for the day. For example, if you're trading a specific event like an earnings release, or oil market meeting, or a political event, you might have a good indication of the result of that event, and that's great. Yet, the market's reaction to this event may have a maximum duration of 30 minutes. Those 30 minutes are more than enough, but you, the trader, will have to be in during that time and get out just in time to make a profit. If you want more time, tough luck. If you want more price action, tough luck. You will have to get whatever the market is willing to give you. Say thank you and move on to your next trade. The market is not what you want. The market just is, and so you will have to be in when it's available and out when it's gone. That's why trading is challenging. And also, guys, something that I've learned through my experience. There is no tomorrow in trading. And what I mean by this is that one thing you should always keep in mind when trading is to keep your focus in the now. Traders should understand that the only moment they will ever have is the now. It's just like the Rocky movie when Apollo said there is no tomorrow. The now increases your capability of receiving opportunities and information that the market offers and reduces your fears and misconceptions. So stay present, keep your mind clear, and observe. Thank you very much, guys.
Hello everyone, my name is Savas.
Hi guys.
This is Odysseas. Today we're going to talk about live floating and live fixed spreads. So Odysseas, how many live floating accounts are there?
So basically we have 4 live floating accounts. As you guys can see on your screen, we got the standard account, the premium account, the VIP account, and the live zero fixed spread account. So we've got these 4 accounts.
All right, 4 accounts, that's nice. Can you analyze the accounts for us?
Yeah, sure, of course. So let's start with the standard basic account. So we have, as you guys see, we have the ability to trade on CFD instruments, which is Forex, metals, indices, commodities, futures, and shares. Right? We got the minimum lot size, which is 0.01. Yes. We have the basic currency, which it can be US dollar, can be euro, GBP, AUD, JPY, of course, BTC,
Bitcoin,
yep,
nice.
PLN, and the CZK. Now, we got the spread, which is a floating from 1.8 fixed to a 2.2. And of course, the commission, which is no commission.
Oh, that's great.
Yep. The flexible leverage can go up to 1,000. And the stop out, it's up to 20%. Now, for the Islamic accounts, which is an option for people,
So we do, yeah, all right.
of course, yeah. We have the swap-free accounts, and a dedicated account manager, of course, which is for all the accounts.
So whenever someone needs, they have their own account manager, basically.
24/7. Now we've got the dealing department, which is transactions. It's like a hotline. Of course, you got them there anytime for your service. And this is basically the standard live floating account. To go on with, we have the premium account, which is basically kind of like similar with the standard account. The difference on the premium account is, as you see, it's the spread.
Mhm.
It's floating from 1.6 fixed to 1.8,
All
right?
Sure.
And the rest you have the same as the standard account, the commission, the leverage, and your stop out. Now we have the third account, which is the VAP account. Mhm. Now on the VAP account, the difference is starting from the base currency. Now you can use only US dollar, right?
All right.
And the spread, it's floating from 1.4 fixed to 1.6. We're talking about a huge difference from the standard
That's
account,
great,
of course.
yeah.
Yeah. And the rest, as you guys can see, basically the same as the standard and the premium account. And
So the only difference is basically the currency,
yeah,
and the whole point is the spread, actually.
exactly.
Yeah, that's great.
Yeah. That's what clients focus on about, basically, on the spread, which is quite a big difference, floating from
Yeah,
1.4
excellent.
to 1.6. And finally, we've got the fourth account, which is basically the live zero fixed spread account. Now, on this account, you guys can see there's a lot of differences compared to the other three accounts. Now, you have CFD instruments to trade with, which is Forex, metals, indices, and commodities. That's it.
That's it.
That's it. Now, your minimum lot size, as you can see, it's the same. It's 0.01.
Yep.
And the base currency is US dollar and the euro, right?
All
So
right.
you have one more option here. And well, where the huge difference comes is on the spread, which, as everyone can see, it's fixed to zero.
That's amazing.
Yeah, yeah, it is. It is. Now there is, of course, a commission coming. Now that's a basic standard commission coming from the company. That will be something to talk about with your senior account manager, of course, once you get started with your account.
All right.
Yeah. And you've got the flexibility to have a leverage up to 500, which is also different from the other three
Previous
accounts.
accounts.
Yeah, the previous accounts are up to 1,000. This is up to 500, right?
But still, you have zero spread, so it's still amazing.
Exactly, exactly. And you see your stop out, it hits at 50%, right?
Instead of 20. Yeah.
Yeah. So basically, this account, it's usually coming for experienced traders. Yeah. And the rest, as you guys can see, you can always have this account if it's even an Islamic account, if that's an option. You have your account manager there 24/7, of course. And
Which is very important.
yeah, and the
the
dealing
dealing
transaction. Yeah. So this is basically the four accounts that the company IronFX provides as the live floating and live fixed spread accounts.
They're actually amazing, especially the one I would prefer was either the VIP or the live zero fixed spread. Obviously,
I know.
Right.
For obvious reasons,
Yeah.
right? I know.
Right.
So guys, this is the live floating and the live fixed spread accounts. It was a pleasure being here with you guys again. Now, of course, it was a pleasure having Savas with me today. And for the next week, we guys are going to be analyzing and talking about the STP and the ECN accounts. So we can break it down for you again with a little bit more information, just like today.
Right. Thank you very much, Odysseus.
Thank you so much, Savas. It was a pleasure having you guys. I wish you guys a great rest of the day.
everyone, Emily here. Today I will be talking to you about some crucial trading tips. 3 important qualities traders tend to ignore. Your personal life should complement your trading career. In other words, if your personal life is a mess, how can your trading be at a top level? You have to protect your personal life and keep your mind clean from outside interfering, as this could affect your trading. Second, you have to enjoy the ride. A successful trader knows how to enjoy his life on the rainy days and on the profitable days. That means if you reach an objective, let's say a profit target, do something for yourself or celebrate. If you failed, move on. Third and final, you must have a balance between your personal life and your trading career. Some traders think that by spending 16 hours per day in front of the screen or doing research, they will be successful. That is a no-no. You have trade, but you should also spend times with your kids, your wife, your family, your friends. So make sure you're chasing the right things. It may sound hard to trade and keep a full-time job at the same time. Yet a number of part-time traders proved that this is doable and actually may prove quite profitable. We have a couple of tips for such a trading. First, be organized and disciplined. Make a plan. Target specific events. Have your technical and fundamental analysis well before the event takes place and stick to your plan. Don't forget to keep it sweet and simple. Secondly, use the technology given. Use the stop loss, take profit levels as well as pending orders and incorporate them in your trading. They tend to take lots of pressure off of you. The same applies for alerts, which inform you instantly when a particular trading instrument has crossed a particular level. I know it takes time to master this, but believe me, they are worth every minute of the time and effort spent. Thank you so much.
Metals are a good portfolio diversifier and extremely popular financial products which traders can use to hedge against inflation. Although gold and silver are considered the most popular metals, there are other ones including platinum or palladium, which are commodities that can be easily added to an investor's portfolio. Metals have various applications including jewelry construction, electronics, or medicines. Traders usually get into metals trading by speculating on the price movement of metals through CFDs, which means that they do not have to own the underlying asset. Gold is the most widely traded commodity around the globe and the most popular precious metal. Political, social, or economic instability are some of the factors that can cause fluctuations in gold prices. Similarly, silver is another valuable investment option, which is easily accessible to many investors worldwide due to its low price. Unlike the Forex market, both gold and silver are considered safe haven assets as their prices are not always impacted by interest rates or governmental decisions. In fact, they are commonly used to hedge against volatility in the USD as gold prices often increase together with inflation rates and a depreciating dollar. Gold, for example, tends to hold its value when other markets' prices fall. That is why many traders turn to metals trading during periods of market uncertainty to balance out potential losses. Moreover, adding gold to your investment portfolio can help you diversify it and potentially reduce risk. Supply and demand is an important factor that affects the price of precious metals. The more the need for metals, the more valuable they become. For example, if there is an interruption of the production in a silver mine due to a strike, it is possible that silver prices would increase in the short term and vice versa. How strong the US dollar is also affects metals prices, as they are mainly dollar denominated, hence very vulnerable to fluctuations in the USD.
Going to teach you the advanced stuff, the institutional, great stuff, the juicy stuff that will take your trading to the next level. All right, it'll be a very fun journey. It'll be showing you how to get access to the VIP rooms. It'll be showing you how to get access to various places to help you really sharpen your arsenal of trading strategies. All right, so let's begin. Right, remember, as usual, I need to let you guys know, disclaimer, that this webinar is purely educational in nature. So nothing in this webinar should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, because trading CFDs is dangerous, right? So always exercise caution before you trade. Okay. Now, for those of you guys who are seeing me for the first time, right? For the first time, it's like, who's this young dude, right? Who's here teaching us, right? I'll give you a quick introduction to your host for today, right? My name is Desmond Young, right? My name is Desmond Young. I run an award-winning research firm, our Everest Fortune Group. We are finalists for Best FX Research and Best FX Research for 2019, 2020, and 2021. And also Best Equity Research for 2020 and 2021, right? So you got a whole bunch of awards. We got a strong team of traders over here. Over time, you'll be seeing me. You'll be seeing this other girl called Cassandra. You might be seeing this other girl called Annabelle, right? They'll be all coming in and sharing webinars on different levels, right? But for today, you have me, right? And I will be teaching you. I'll be guiding you on how to be a better trader. And as you can tell from my picture, from my video, I'm not that old, right? Pretty young guy, right? Trading full time for a living, right? Running an entire team, entire prop trading firm here. And if there's any word of encouragement I want to share with you guys, is that you don't need to spend 30 years, in Bloomberg or in the industry just to be a good trader. You just need to spend 30 days learning the right stuff to be a good trader. Okay, you don't need 30 years, you just need 30 days learning the right stuff. And the thing about trading, right, I just want to set the tone for all of us who are beginning this journey together with me, right, is that trading is very different from the world of academia, right? So, when we're studying, when we go to schools, right, when we go to class, right, when we take exams, right, how much we study usually is directly positively correlated with how good we are going to do, right? The more we study, the better we do. It is very, there's that correlation there. And therein lies the problem with trading, because a lot of us who are good at studies, right, they think that, all right, we are good with studying, so we should ideally be good with trading, right? The more I read on Baby Pips, the more I read on Forex Factory, the more I'm going to trade better, right? But that is far from the truth, because in the world of trading is very different, right? You need to throw in your emotions, right? And you need to learn. You can learn the right stuff, and equally, you can learn the right stuff. And the scary thing is that you can learn the wrong stuff. Okay, you can learn the right stuff and you apply it wrongly, and you end up losing money. Right, so that's how trading is. It's very different from the world of academia. We cannot associate knowledge with profitability. Okay, we cannot associate knowledge on how to trade Forex, all the different trading strategies, all the technical indicators, stochastic RSI. We cannot associate that with being a good trader. Okay, I can teach you a very advanced stuff like Elliott wave. right? And teach you Elliott wave, right? But if you try to apply it to a different style of trading, like maybe apply it to a single instrument, you're not going to make money because Elliott wave requires you to look at the correlation of all the markets, for example. Right, so it's a very, very dangerous thing that we're looking at over here. You in trading, you need to learn the right stuff, and you must avoid learning the wrong stuff, and must avoid applying the wrong stuff. Okay, and in this webinar, I'm just going to share with you my journey. How I've went from literally nothing to being a good trader. Right, it took me over 7 years. I learned the right stuff, I learned the wrong stuff. Right, I blew up many accounts. Right, and how I finally reached a stage where now I run an entire prop trading firm, trading profitably. Right, I learned from the best previously. I'm going to share these things with you. I'm a heavily technical trader. I focus a lot on technical analysis, right? And I'm going to share and try and impart as much of this knowledge as I can to you. The scary thing I do want to share with you is that most of what you find online, right, is not the right stuff. Amazingly, it's not the right stuff, right? You might find stuff on Baby Pips, Forex Factory. You might find stuff, this Investopedia, right? They have an interpretation of, for example, how to use a very simple stochastic indicator, but my take on it is very, very different from it, right? Because I found that a lot of what the world teaches tends to be from the wrong point of view. It's a very, very retail kind of point of view, right? I'm going to share with you from an institutional perspective, right? How we look at technical analysis, how we look at fundamental analysis, how we look at trading strategies. We're going to debunk a lot of different different approaches to trading. Like a lot of people like to use a fixed stop loss and take profit, but that is the worst thing to do, for example, right? And I'll be sharing with you that in the upcoming webinars. I'll be showing you how to get access to it in a bit, right? But if anything, I just want to set the tone for you guys that, you don't need 30 years to be a good trader. You just need 30 days learning the right stuff, right? And we have a very special partnership with IronFX where zero compromises and bring you guys the best education you can get, the stuff that you probably need to pay a lot of money out there, right? A couple of $1,000s just to go through, bring it to you guys. Let's make this fun and interactive. There's a chat section there for you guys. If you have questions, I recommend ask them right away, right? I literally have another screen open over here, monitoring the chat that is coming through. Right? I'll do my best to answer them when I can. Right? Because usually by the end of the webinar, we hardly have any time to answer any of the questions, right? So if you have anything that pops up halfway through, just send it through, all right? Now, let's begin to this session, right? What is the agenda for today? A few things we're going to touch on, all right? Introduction to the world of trading. What exactly is Forex, right? I'll be showing you a little bit about my take on it, right? Explaining it in very layman terms for you guys to understand, because honestly, I am not a big fan of jargons, right? I'm not a big fan of making things complicated, right? The big words out there. I like to keep it simple, and I want to show you that if we keep it simple, it's very simple. Trading can be very simple. All right. So be filtering through the noise of jargons, and then we're going to answer some key questions that many people usually have when it comes to trading. How much time do you need to trade? Right? Do you need to trade 8 hours a day? Right? Do you need to trade 4 hours a day to be a good trader? Right? What kind of trading strategy is the best trading strategy? Scalping, day trading, swing trading, what kind of strategy is the best, right? How much time do you need to really master trading? And how do you go about mastering trading? Is there a step-by-step plan, right? I'll be sharing with you that later. Very exciting stuff. Which products should you focus on? IronFX offers a lot of products to trade, right? A whole wide range of them, FX, commodities, indices, right? So many of them. But what products should you focus on to trade? Right, and what trading strategies work better for which products? We'll be touching on it later, right? But if you have questions, shoot them right through. All right, guys. And then lastly, you're going to touch on, if you have time, different approaches to trading. Okay. Now, let's continue on to the session. Okay, bear with me. Sometimes I talk too much, I talk too fast, and so I lose my voice, right? Okay, let's begin to the session, all right? So what exactly is Forex and how does it work? So the short answer to this is that Forex is actually, if you think about it, right, now that the borders are open, I'm not sure which countries you guys are from, right? But now that borders are open, we might be traveling around. we might be traveling around a bit, and the places that we're going to see is we're going to see the money changers, right? There are so many money changers around, and that's the amazing thing. Forex is essentially just like money changers, okay? It is exchange of currencies from one currency to one foreign currency, right? Well, foreign currency to foreign currency, right? Local to foreign currencies. Basically, you know, what is Forex? It's just foreign exchange, right? Now, taking one money and giving it to another person. Let me put it into a form of an example of something which we might be very familiar with, right? Because, you know, maybe you're exchanging some money to go on holiday, right? So let's talk about a scenario over here, right? Maybe I'm in the US, right? I'm in the United States, and I want to go to Japan. Okay, I want to go to Japan, right? I have $1,000 with me now. Okay, I have 1,000 USD with me. Okay, 1,000 USD. I go to the money changer, and I get $100,000 yen, right? $100,000 yen, as you can see over here, right? This is before the holiday, okay? I go on a holiday, right? So I'm now in Japan, right? I'm going to Japan. I'm on holiday. I'm eating sushi. I'm eating my sashimi. I'm eating my, well, not wasabi, right? Just eating all the different food I have, right? Eating all the different food I have, having my time of life in Osaka, right? And now I come back from the USA, right? Now I come back from Japan, and I come back to the USA, okay? Before I went to the USA, before I went to Japan, one USD equals to 100 yen. Okay. One USD equals to 100 yen. When I come back from the Japan, now my one USD is equals to 110 yen. Okay. I still have my yen with me now, right? I have not changed it back to USD. Okay. I have not changed it back to USD. Guys, if you can, you want to try, take a shot, right? I can see Donald raising his hand, right? Did we make or did we lose money? You know, with one USD is now stronger. One USD is now worth 110 yen, right? And we just came back from Japan. We want to change some money, right? Did we make or did we lose money? Anyone want to take a guess, right? Anyone want to take a guess whether we made or we lost money? Right, I know it's you guys can send me the answer, you know, directly to a host and panelists. You can send to everyone, right? It depends whether you want to show it everyone, you want everyone to see it, or you want to send it in the, I know some of you guys in Q&A. If you want to send it in the Q&A, that is perfectly fine too. All right. But what I want to share with you guys is that if what happened basically is that the USD strengthened, right? The USD strengthened. So now previously your one USD, right, is worth 100 yen. Now your one USD is worth 110 yen. So you can get more Japanese yen with a single US dollar. Correct? You can get more Japanese yen with a single US dollar. But the problem with this, so that means the yen is weaker and the USD has strengthened. In this time where we are away in Japan, the yen has, you know, it has weakened and the US dollar has strengthened. The problem is that we have yen, right? Hey, Kakana, nice to see you tuning in from South Africa. Welcome, right? Thanks for joining us, right? So yeah, the problem is that we have the yen, so we need to convert it back to USD. And because the yen is now weaker, right? That means, you know, we can exchange it for less USD. So even though our base currency, you know, we feel like, oh yeah, you know, USD has strengthened, but if we were holding onto the wrong currency at a point of time, right, we end up losing money. Okay, so in this particular scenario, we have lost money, right, because we're holding on to the yen. However, if you think about it, it's very close, you know. However, when we came back, right, while we are coming back, before we reached back home, you know, we converted the yen, right? We converted the yen to USD, and by the time we came back, then it strengthened. Then we have made money, right? So you know, it's very time sensitive, right? The whole concept of foreign exchange, you know, it's very time sensitive. Okay. Now, all right, Darlington, nice to see you guys tuning in from Nigeria. Welcome to the webinar, right? Nice to see you guys here, right? Hope you have a good time, right? A good time. If you have questions, remember, send them through right away. I can see your messages come through, right? So I'll do my best to answer them all along the way. All right. Now, right, Cyril, nice to see you, guys. Nice to see you from South Africa. Well, a couple of guys from South Africa. I'm just curious. I can see quite a number of you guys in this webinar. Could you guys share with me which countries you guys are tuning in from, right? And if you want, you can guess which country I am from, right? So I'm pretty sure not many people can guess which country I'm from, right? But yeah, it's you can share with me which country you guys are from. That'd be pretty awesome. Okay, right. Wait, is it Natalia from London, UK? Oh, that's great. That's great stuff, man. Welcome to the webinar. We have another person from South Africa, right? Mokonokto, right? Quite a number of you guys tuning in from South Africa. That's nice, right? So anyway, I'll just slowly continue on the webinar, right? Feel free to chat in the chat panel, okay? Now, deciphering jargons, okay? One thing I want to do, right, is I want to decipher as much jargons as possible, right? And if there's any jargon which you guys are not familiar with, send it in the chat section. I will do my best to answer them, right? If there's any stuff that you might have encountered recently and like, man, what does that even mean, right? Just send it. I'll do my best to answer it, right? Carlos from Oxford, UK. That's nice, man. That's nice, right? We got Notuli, right? South Africa, right? Guva Mombe from Zimbabwe, and we got Fatima from Philippines. Oh, that's very nice. Now I went to the Philippines a couple of years back. Yeah, I went to Philippines a couple of years back. I think I went to Smoky Mountains or something, or some kind of a mission trip or something. Right? Yeah, it's Philippines, really nice place. Right, I love Jollibee from there. Right. All right, man. All right, now let's continue today's session. All right, deciphering some jargons. Okay. Now, pips, right? We always see people talk about pips, right? Like, hey, I made 10 pips, I made 50 pips, right? In trading. Now, when you see pips, the only thing you need to know is that they are referring to literally kind of points, right? So there are two kinds, right? Anything that ends with /JPY, right? So you can talk about AUD JPY, USD JPY, blah, 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 /JPY. And you can talk about all those that end with /USD or /anything else, right? Most of them, right? A pip refers to the fourth decimal place, right? This is a pip, right? This is a pipet, but people rarely say I made one pipet or something, right? People rarely say that, right? Most of the time people will say I made 0.1 pip, which is equal to one pipet, right? So when someone says, oh, price has went up by 10 pips, right? It basically means that price has went up, to 0.0010, right? This is 10 pips, right? The fourth decimal place. The fourth decimal place, each one is, 1 pip. So if it goes up 10 pips, it goes up to here, becomes 10 pip over here. For yen, it is the second decimal place, right? Over here. So anything with a yen, if it says you go up by 1 pip, you're referring to the second decimal place. If you go up by 10 pips, you basically means that it goes up to, 0.10. Okay. Yvonne from South Africa, welcome. Thanks for joining us, right? Very fun session, right? We are pretty fun session in this webinar. All right. So so people talk about long or short, right? Long means you're buying, short means you're selling. That's all you need to know. Okay. Long means you're buying, short means you're selling. That's all you need to know. Hawkish and dovish, it means two different things. Okay. Hawkish basically means that it's hawkish. People who are hawkish, they usually are in favor of currency appreciation. They want the currency to strengthen. They want interest rates to increase, right? And their objective is to reduce or kind of contain inflation, right? For people who are dovish, right, they are usually on the side of currency depreciation, meaning they want currency to get weaker. They usually want the interest rate to decrease, right? And usually the objective of doves is essentially to stimulate the economy. Okay. Now, that's all you need to know about hawkish and dovish. You see people throw it around a lot, right? Usually it's just, people who are hawks, they want the currency to strengthen. Think about hawks, they like to be very aggressive. They want currency to strengthen. They want to increase interest rates, right? Attract more. They want to increase interest rates, right? And people are dovish, they're milder. They want currency to depreciate. They want the interest rates to decrease. Okay. Now, Now, lot size is basically lot size you use to trade. So when someone says, how many lot sizes do you use, when you trade, you're like, oh yeah, I put in 0.1 lot, 0.2 lot. They're just referring to, to MetaTrader 4, MT4 when you take a trade. Okay. Like, because the MT4, they use lot sizes to trade, right? Major, minor, and exotic currency pairs, very simple. Majors are anything with /USD behind. Okay. Or have a USD in it, like USD slash JPY, USD CHF, right? Anything with USD in it, we consider a major. I know it's a little bit biased, but but apparently anything with USD in it is considered a major. Minors are anything with like usually any of the other currency pairs, other I think it's G8 or G7 currency pairs, right? We're looking at the AUD, right? You're looking at NZD, you're looking at GBP, right? And also if you're looking at GBP AUD, GBP JPY, NZD JPY, all of the other stuff that doesn't have USD in it, we consider it as minors, right? So someone say, hey, sometimes people call it minors, sometimes people call it crosses, right? But sometimes when you hear people say, yeah, it's I'm trading, I only trade majors, I only trade minors, right? You're like, wait, why in the world are you talking about major or minor, right? It essentially just means this: majors, anything with a USD in it; minors, anything which is more any of the other crosses, the major G7 countries. And exotic currency pairs are those that are a little bit more exotic, South African rand, right? Dollar ZAR, all these China yuan, right? All these different not so popular ones, right? We consider them exotic currency pairs. Okay. We talk a little bit about, there are three major sessions that look at Tokyo, London, and New York sessions, right? These are the times when there's a little bit more liquidity, so to speak. Right, London and New York overlap. We call it as overlap. Before the markets close, there's actually a time where they overlap. That is where there's a lot of volume, right? But that does not mean it's the only time to make money there. There are many ways to make money in trading. And today I'll be giving you the foundations of, giving you the foundations of how to do that, right? Anyone who says bullish means you're going up, bearish means you're going down. Okay, simple stuff. Don't want to jump too much into it. Safe haven. Safe haven is basically, how do I explain it, right? Safe haven are places, are instruments where people flock to, when things are risky, right? You're looking for a safe place to go to, right? And that's what kind of safe havens are for, right? So for example, Russia and Ukraine war, right? Man, things are heating up. People are like, oh, could this be another world war? Right, is this going to be rather scary? Right, if it's a little bit scary, what they're going to do is like, I think this is a little bit too risky for me. I want to put my money in a safe place. So what are these safe places, right? One of it is, of course, gold. When everything collapses, when all the world's economies collapse, if you hold on to a bar of gold, there's this gold does not have a country it belongs to. Gold is just gold. It's pure material. It's heavy. How much is worth its weight in gold, right? There's a popular saying: "It's worth its weight in gold," right? So gold, is the safest so-called thing, safe haven. And then there are currencies which are safe havens, like the USD, right? Because people think the United States is so huge, there's no way in the world that the United States can collapse, right? So people think of the US dollar as a safe haven. People think of the franc as a safe haven. Switzerland, people think of Japan as a safe haven, right? People even think of the Singapore dollar as a safe haven, right? These places are very safe, right? Very safe, right? So safe havens, are basically places where people, when the going gets tough, when the going gets risky, right? It attracts a lot of attention. All right. Another thing that we look at is, of course, risk on, risk off. Basically, you just think about risk on, risk off. In a sense, like risk on means there's a lot of appetite for risky stuff, right? Let's go into Bitcoin, right? Let's go into equities. Let's go into Tesla. Let's go into the stuff that are a little bit riskier, right? But when people say risk off, right, basically means that you think about a switch, like you're trying to turn the switch off. Risk off scenario, let's play it safe, right? Let's go What happens? Risk off. You don't have the appetite for risky stuff. You go to safe havens, for example. So you can see how they're related over there, right? Bid and ask prices, right? You sell that bid, you buy ask, right? That's basically the spread. When people talk about spread, it's the difference between the ask and the bid price, right? It's the difference between the ask and the bid price, bid and ask price. Sorry, right? So this thing in between is called the spread. Liquidity, very simple. Liquidity just means how how much volume there is in a particular kind of instrument. Okay, what I mean by that is if you wanted to sell your iPhone, right? If you wanted to sell your iPhone, there will be a lot of you go to any of these places where you can sell second-hand phones, right? You go to any of their plans and say, I want to sell my iPhone. There's easily a lot of buyers who want to come in and say, yeah, sure, I'll buy your iPhone. This is the price I offer you at, right? And the prices all tend to be pretty close to each other, right? So if you have a very popular product, like a major currency pairs, popular products, a lot of eyeballs on it, a lot of people trade it, right? Like an iPhone, you want to try to sell it, people can easily come and tell you like, okay, I'm going to offer you this price, and they're not going to differ that much from each other, right? But if you have a Nokia, right? You have a Nokia 3210, right? One of these old Nokia phones that you have, right? And you're like, hey, you go out there and say, anyone wants to buy my Nokia, right? People are like, what? Some of them might be saying, what the hell is that Nokia? What is it even, right? It's like, oh, it's a handphone. No one even knows it's a handphone, right? And then the prices, you get a lot less people coming up to you, giving you offers, right? A lot less people want to buy it. And even if people offer to buy it, one person is saying, maybe I'll buy it off you for $50, right? Another person buy it off you for $100, right? So the prices differ a lot because there's less liquidity, essentially. Less people interested in trading market, less liquidity there. More people interested, right, in trading Tesla and trading euro dollar and trading these kind of big currencies, right? The more liquidity there is, the better your spread is. Okay. Last thing I'll touch on is slippage. Okay, slippage basically means when you want to enter into a trade, and the moment you press the button, right, when price might go against you or for you. Imagine, right, if your price is like falling, price is falling, right? And you decide, okay, I want to sell, right? You click here, sell here, right? Price can either go down or go up, right? So if there's negative slippage, it means that you got in a position that's not as good. You wanted to sell here, but you got in over here, right? Positive slippage is that you wanted to sell here, but you got in over here, right? Got in slightly better, right? So usually in trading, slippage is a common thing. Slippage is everywhere. Sometimes you'll be slipped. Slippage is positive. Sometimes slippage is negative, right? It affects both ways, right? But slippage always happen. All you need to know is that what slippage means is that when you enter a trade, usually it will there's a little bit of time between from the moment you press that button, the button, right, to the time you actually get into the trade. The little bit of time difference, right? That's where slippage can happen. Now, of course, if you want to reduce slippage, some of the things that you can do, get a good internet connection. Make sure some people have VPS, virtual private servers, which the servers are closer to maybe IronFX trading servers, so there's less latency. I'm not sure if many of you guys ever played games before, but imagine you're playing a game, right? So they talk about lag, they talk about latency, right? So if you are playing a game and you're playing against this person who is on the other end of the world, right, and you two try to play together, right, it becomes very slow, right? You do something, it takes him a few seconds before he sees it. He does something, it lags a bit before you see it, right? So, but then if you are playing a game and you're right there beside, your friend who is playing right beside you, you're both looking at the same screen, same TV, and you're just playing, right? There's almost practically zero latency, zero lag, because you two are very close to each other, right? The further you are, the more latency, the more lag, the more slippage, right? So that's the concept you need to wrap your head around, that you can actually reduce slippage through these ways, right? Of like getting good VPS that's near your broker server, stuff like that. All right. Okay, let me pause a bit. Of course, guys, if you have questions, please, I encourage you guys to send it through, right? Don't wait until the end before you send it through. I'll do my best to answer them. Okay. Now, the opening hours of Forex, right? Why is it a 24-hour market? How people are thinking, how in the world is Forex a 24-hour market? It's very simple, right? At the start of the day, right? Sydney gets up. In fact, Sydney gets up even if you're looking at GMT time like here, right? So when Sydney is up, Tokyo gets up slightly later, right? Tokyo gets up slightly later over here, right? So Sydney and Tokyo are awake in the morning. Just before Tokyo closes, right? You got London getting up, right? So this is that's actually pretty sweet spot. Tokyo London overlap, right? Actually, it's not just Tokyo, right? Many of the other countries out there, right? Asian countries, they overlap with London like now, right? For us, Singapore. I'm based in Singapore for anyone who wants to know, right? There's a little bit of overlap also. There's a little bit of trading volume, right? Before London closes, US wakes up. And this is the US London overlap. Very popular for a lot of trading volume, right? So we got a question from Darlington asking, what is the best time to trade, right? Very good question, right? And actually, my answer to that, what is the best time to trade, is that there's no best time to trade. Okay, there's no best time to trade. You trade when the market gives you the opportunity to trade. During these periods of time, you have more trading activity, right? There's more trading activity, but that does not mean you can only trade during that time, right? You might be able to find a trading strategy over here, and then the trade gets carried on all the way until here, right? Even though there's the most volume there, that does not mean it's the best time to trade. It just simply means the market is the most active there. You could take a trade, and then it might get triggered, when it reaches this time. But that doesn't mean that you don't trade. You only wait until the markets are open. Like there's a US London overlap, time for me to trade. That does not mean it. It's in fact not best trading time, but it's actually most volume in trading. The most active trading time. It does not mean best. Okay, probably I will probably replace this with most active trading time. Okay, because I don't want to give you the idea that this time here and this time here are the best times to trade, because I've made a lot of money, right? Not trading these times, right? There are other ways to work around it. Okay, I hope that answered your question, Darlington. Now, moving on to the next one. Where's my PowerPoint slide over here? Moving on to the next one. How much time do you need to trade? Okay, so anyone want to take a guess, right? Or can you guys share with me how much time do you guys usually allocate to trading every day, right? Like how much time do you guys have to trade? Do you guys trade, 1 hour a day? Do you guys trade 3 hours a day? Are any of you guys full-time traders trade 8 hours a day, 16 hours a day, right? Can you guys send it in the chat section? How many hours, so the rest of you guys can see it too. How many of you guys, how much time you allocate to trading every day, so I can get a rough gauge on what kind of strategies we can work on, we can look at together. Natalia, do you trade 24 hours or do you trade 2 to 4 hours? Not sure if you meant 24 hours, right? Right, we got Cyril, right? Trading an hour a day, right? Mahoda, wow, 8 hours a day. That's nice, right? We got Lama, a day trader. Day traders, I guess, well, day trader is the trading strategy, but how much time do you have in a day to trade? It also depends, right? Right. We got Sarero, 5 hours is pretty decent, right? We got Kanaka, right? It's 5 hours. Derek, want to start trading only on New York session? I'll touch a little bit on that in a bit, right? 2 to 4 hours depends how busy your day is. All right, I got it, right? So I notice most of you guys got a couple of hours a day to trade, and that should form the basis of your trading strategy. Okay. Now, sometimes a lot of people ask me, what is the best trading strategy? Should I be a scalper? Should I be a day trader? Should I be a swing trader? Should I be a position trader? What kind of strategy will make me the most money, right? And I can share with you this, that there are many strategies that's going to make you money, but it has to suit your trading style, right? If I told you that if you only had, like, for example, Natalia, right? If she only has 2 hours to trade in a day, and I recommend her a trading strategy that requires 8 hours of constant monitoring of the market trade, she's not going to do well, right? Because she's like, she only has the 2 hours, maybe 2 hours in the morning, 2 hours in the evening, right? Maybe you only got a little bit of time to trade, but how are you going to use that? You know, if I told you that I have this trading strategy that requires you to trade 8, 10, 12 hours a day, right? You won't be able to do it, right? And there are trading strategies out there which only require you to put in 1 hour in the morning and 1 hour in the evening, right? You can be a profitable trader already. Different kind of trading styles, and it also needs to fit your kind of trading personality, your psychology, your risk tolerance level. For example, I've been trading for a long time, right? I have good trading psychology, right? But the problem with it is that, you know, I still find it very hard, right? I still find it very hard to hold a trade overnight, right? I still find it very hard to hold a trade overnight. When I take a trade, right, I sometimes wake up, I sometimes wake up in the middle of the night. I'm like, oh, shoots, you know, did I make money? Did I lose money? So I have dreams. I have nightmares sometimes. Nightmares, right? That I got stopped out. You know, I sometimes wake up, it's like, my subconscious in my mind, you know, is running, thinking, did I make money? Did I lose money? Right? It keeps running, and it's so scary, right? That's a scary thing when you, and I know when that happened, that I cannot take trades that last longer. And that I cannot hold trades overnight. Even I know all the risk tolerance, I know all the trade management, I know risk management, I know all of that, right? But my risk tolerance, just does not sit with me that I can take trades overnight. So I might want to be a swing trader, but my risk profile, right? The way I'm built is not able to be a swing trader. That's why I need to look at day trading. I need to look at scalping. I need to close off my trades within the day. Right. So then I need to look at trading strategies that suit my kind of personality. So that's a tricky thing, right? I can see Sheriff asking, I trade most midnight, right? Is it well, right? It depends which time of the day, which country you are from. I think, if I'm not wrong, you mentioned previously, was it South Africa, right? One thing I want to recommend to you guys, right? Sometimes, you know, it might not be a good idea to trade too late at night, right? Because think about it, our brain, right? Our brain is like a muscle, right? This is a little bit of trading psychology I want to share with you guys. Our brain is like a muscle, right? Have you ever exercised before? You know, you're exercising, maybe doing bicep curls and stuff like that, right? You do the first 10, right? You can do it. It goes to 15, it gets a little bit tired. Do a little bit more, 20, you know, your arms get really, really tired. And, you know, the more you do it, the more tired your arms get, and it reaches a point where you can't even raise up your arm anymore because you're so tired, right? And the brain is that way. You spend most of your day thinking, doing work, going to work, you know, taking care of the family, cooking food, right? Taking care of the kids, driving around, right? And towards the end of the day, your mind, your mental processing power, right, is just not as strong as anymore, right? It's, you know, it's tired, right? It's like the brain is like a muscle. You know, have you ever came back at the end of the day and just like, man, I am exhausted. I just want a beer. I want to sit down, take a drink, relax my mind. You know, I don't want it anymore. That is your mind. That is your mind being tired, right? So imagine your mind is being tired and it's the middle of the night and you want to start trading, right? That is actually pretty dangerous because the market is tough. You know, people, the hedge fund traders, right? They go in with, they even meditate before they come in. Their mind is all bright and they're ready to take on the markets, right? And they need to take it on with having that alertness, right? So sometimes it's a little bit tricky when you take on the market at night. There's nothing wrong with the time of the day we are trading it. It's more important, like, what is the state of your mind? Is it strong or is it weak? Are you tired or not? Because you're tired, you might compromise on your trading strategies. However, if you work the night shift, right, you're gonna trade in the middle of the night, then it's fine. You know what I mean? Right? Oh, okay. Africa, Uganda, not South Africa. No, sorry about that, right? But nice to see you tuning in from Uganda, right? Yvonne is saying that it's getting yes, Yvonne, we will be uploading this on YouTube, right? So go check out the IronFX YouTube channel. I'll be showing you guys how to get access to it. So in case any of you guys have internet connection issues and drop out a bit, this recording, it won't be uploaded right away, but you can find it over there on YouTube. Okay, but how much time do you need to trade, right? So I got all the different answers coming in, right? But I want to share with you that, okay, scalpers usually Scalpers, you usually need the most time in the day to trade. Okay, scalpers need the most time in the day to trade, right? So we're talking anywhere in 4 hours, 4+ hours to trade. You need to dedicate that much time. Okay, swing traders, if you ask me, need anywhere from 30 minutes to 1 hour, right? You should not need too much time to trade. You look at the markets a little bit every day, should be enough. Okay, if you're a day trader, you need at least more than 1 hour to trade. You need to look at the markets at least 1 hour in the morning, 1 hour in the evening, so maybe a total of 2 hours, right? And if you're a position trader, maybe you don't need that much time. You just need 15 minutes every day. Check your charts, make sure everything is right. And it's for the, it's a long-term kind of thing. You don't need to dedicate that much time to trade. So depending on the time availability that you have, on the answers that you gave me earlier, right? It can give you two different, what's the word for it? It can give you two different kind of, not say two, four different kind of choices on like the kind of trading style that you want to use to trade, right? If you have a lot of time to trade, you can consider a combination of day trading, swing trading, like a dear friend Natalia, 2 to 4 hours. You can do a combination day trading, swing trading. You can even do position trading and scalping if you want. But if you only have that little bit of time, half an hour to trade, right, you might want to consider swing trading, right? You don't have that much time to trade, you might want to consider swing trading. You might want to consider position trading. We're going to teach you all these different kind of trading strategies which you can use in trading, right? And how you can apply it across the different time frames. Okay, so that's an important consideration to take note of. Okay, now I do want to touch a little bit on this concept on how much time it takes to master trading. Okay, a lot of you guys, I'm not sure how many of you guys, how long it has been since you guys have started trading, right? But I shared this a little bit at the start of the webinar. I want to share it again over here right now because I see a lot more, about double or triple more attendees have came in. That I'm a young guy. Okay, I'm a young guy. I'm 32 years old, right? I just became a dad 3.5 weeks ago, right? So I run an entire prop trading firm, right? Trading full time, right? And I do want to tell you that you can be a profitable trader. You don't need. I know I'm not here with like, in a big suit and stuff, right? Saying that I have 30 years in Bloomberg or Thomson Reuters and that you need all this experience to be a good trader. Right, I'm here to tell you that I've went down the path of blowing up account after account after account, total of about 7 accounts. I traded for a long time, many years, right? I think close to a decade. I learned the wrong stuff. I learned so much of the wrong stuff so that I can finally filter out and know what's the right stuff to learn, right? And I want to let you know that you can be a good trader in just 30 days, right? You can learn the correct knowledge in 30 days to be a good trader. But you just need to practice it. You need to practice, practice it to be a good trader. Okay, learning is one thing, trading is another thing. That's an important thing I want to let you know. Learning is one thing, theory is one thing, and trading is another thing. And that is why I want to take this opportunity to let you guys know that this new series we have with IronFX. Thank you very much. Thank you very much, guys. Yeah. Thank you, Lama. Right. Thank you, Sarun, Kumar, Sharif. Right. Yeah. It's I'm now a dad, so not sure you can see my eye bags, but maybe tomorrow, maybe the day next week, you start seeing me have like really, really mad eye bags because oh man, I never knew a baby could have like could drink that much, can poop that much, right? It's crazy, right? Now I'm able to even trade the US session because I'm stuck awake all night. But yeah, it's a bundle of joy, right? It's 3.5 weeks, haven't reached his first month, right? So yeah, it's gonna be a fun time, right? But now it's important thing that I want to share with you guys too, that IronFX, we are dedicated, right? This to really, really helping you be a better trader. How are we gonna do that? What I'm teaching you today is the theoretical session. We're teaching you theory. But the great thing is that tomorrow we have a live trading session. Very exciting. Let me just show you how to get access to that. Okay. Live trading session. Bam, coming here. Right. I'm going to come here. You want to go to IronFX.com. Okay. You want to go to IronFX.com. You want to go to, just let it load a bit. I believe it's, where is it? Schools. IronFX school webinar. Right. Webinar. You can see that does not look like me. Right. But yeah, you can come down here. Click on English. Live trading session tomorrow. Okay, live trading session tomorrow. That's where I take on the markets together. It's very, very exciting stuff. I'll actually share with you some of the juicy trades that I have found, right? I'll be showing you how we actually take on the markets. You'll be looking at the way I do charting, right? Do analysis, right? Do Fibonacci, retracements, extensions, expansions, support, resistance, trend line, right? Channels, right? Correlation. I'll be doing everything, right? If you're watching me trade live, and you can also ask me if you have a request on euro dollar, you have a request on Aussie dollar, that'll be the perfect time where you can jump in. You can ask me, I can answer it, right? It happens same time, same place, right? I'm gonna copy this link address. I'm gonna send it to you guys, right? Same time, same place tomorrow. Please go register for it. Trust me, you're not gonna regret it. We're gonna look at the markets. It's literally living and breathing the markets, right? We're gonna look at it. We're gonna trade it. It's gonna be a fun time, right? Gonna look at some juicy setups, right? We have a hit rate. I have a hit rate of 70-80%, right? Pretty good hit rates, right? Which I hope that the great thing is that all these webinars are recorded for you to review, right? I dare to do that, right? I dare to stick my neck out there, right? Call the trades. If it's profitable, right? That's great. You'll see me in next week's session, right? We celebrate it together. If I make a losing trade, that's part of trading, okay? But I will not run away from it, right? And that's the level of that's the level of accountability I hold myself to, right? And of course, this is another sneak preview which I'll be showing you guys right now, which is the IronFX VIP room, and how you can get access to it. I won't be giving you guys the link to it yet, but I want to show you how it looks like, right? Because we should be releasing this over the next either tomorrow or next week, right? And it's a VIP room, right? As long as you're IronFX client, you get access to this. I'm going to share the screen with you right now. Super awesome stuff, right? New share. Okay, here you go. This is the screen. This is the IronFX VIP room, right? It looks like it's like a chat room kind of area, right? Where you can come in, right? We have a whole gamified stuff over here. So the more you post, right, the more you chat, you will rise up the ranks, right? As you rise up more ranks, we're going to give you different prizes. Maybe give you different, like I have a lot of custom indicators I can give you there. But the important thing about this platform is that when you're IronFX client, and let's just say we're looking at euro dollar over here, right? We're looking at euro dollar over here. So I need to resize this, right? So imagine you have a question, right? You're looking at euro dollar and you're like, man, Desmond, is this a good time to buy, right? You come in here, you draw this support level over here, right? And you say, hey, hey, Desmond, right? Is this a good support level, right? What support level am I referring to? Just need to highlight my text over here. Click on this button called link object to text. You will click on this button over here. Click on it. Okay, I'm referring to this horizontal ray, right? And go and click confirm. Now, what happens when you send this message through? Of course, you can see again a little bit of experience points up there, right? If I'm reading this message, or if you're reading this message, right, say, hey, Desmond, is this a good support level? All we need to do is to hover our mouse over this, and you can see it lights up. So I know exactly what you're referring to. So I can come into a little dedicated discussion with you, and I can say, yeah, this happens to line up, right? Maybe this happens to line up with not sure you can see it. Yeah, it happens to line up with a 23% retracement, right? What 23% retracement? Highlight this, link it to this Fibonacci retracement. There you go, 23% retracement, right? Oh, sorry, and send the message through. So you look at this, can light up. That is a 23% retracement I'm looking at, right? And we can have a whole dedicated discussion on this over here. So we have, we're going to support the majors, we're going to support the minors, we're going to support the commodities, the gold, the silver, the oil, right? We're going to support the indices. It'll be a whole nice VIP room where you can get direct access to me, the other IronFX analysts out there. You get to ask us questions on the markets. We got to answer you, right? But most importantly, you get to practice what you learn. Right, you get to practice what you learn here, in the Tuesday sessions, right? In the next few sessions, you're going to talk about technical analysis, fundamental analysis, go on and on and on. We'll cover more advanced topics along the way, but it'll be a fun time where we're gonna. Can I show you all the webinars? Right? Yeah, no, I think we haven't added the rest yet, but this is a place where you can practice your analysis to be a good trader. Okay, right? I won't be giving you the link to it, right? Maybe you can tune in tomorrow or next week, and I'll be showing, if it's ready by then, we'll release it to you guys, right, to get access to it. Okay, pretty awesome stuff, right? Pretty awesome stuff, okay? But now let me just let me just bring ourselves back to this. How can I just bring it back? Yeah, let me bring back to the screen over here, right? And what I want to show you guys next, right? What I want to show you guys next is yes, how much time it takes to master trading. Why I'm trying to focus on here is that yes, I'm going to teach you, right? You just need 30 days to learn the right stuff, but you need to practice it. Where to practice it? Practice it in the IronFX VIP room, which will be giving you access to, right? And that is how you take your trading to a next level, right? Because you can be practicing, but if you're practicing and applying it wrongly, you know, it's not going to help you in your journey to be a better trader, right? We're going to teach you how to do that, right? It's going to be a fun time. So yeah, stick around with us, all right? Now, next thing I go to fundamental versus technical analysis, which is better, right? I do want to let you know that it's good to have a good understanding of both, right? Which will you choose? Depending on your trading strategy, it depends, right? Depending on your trading strategy, you might want to learn more fundamentals or you want to learn less fundamentals, okay? What do I mean by that? Okay, for example, if you are a scalper, right? If you're a scalper, right? Let me see. If you're a scalper, fundamental analysis is not that important to you, right? What do I mean by that? Let's just say you are bullish on gold, right? Your fundamental view is that because of all the uncertainty in the world, for a long time, this market correction, has been coming, right? The Russia-Ukraine war being dragged out, you are bullish on gold, right? You expect gold prices to rise over the next couple of years. Now, that knowledge is not going to help you trade the next 5 minutes. That knowledge is not going to help you trade the next 1 hour on gold. It doesn't really help you that much. It'll help you if you're a position trader and you take a long-term trade on gold, you're looking at a 1 week, 1 month chart and you're taking a long-term trade. Yeah, that makes sense, right? But that knowledge is not going to help you if you're going to just take, is gold going to go up or down in the next 10 minutes, right? If I'm a scalper, right? That knowledge is not going to help you, honestly. Right. So that's the important thing I want to tell you, right? Fundamental analysis, it's important, but it all depends a lot on your approach to trading. Fundamental analysis is more important for position trading and swing trading, less important for scalping and day trading. In fact, if you're scalping and day trading, man, you need to really, really be good in technical analysis. You need to be very good in technical analysis, right? You want to be a good day trader, you want to be a good scalper. Right? If you're a position trader, you need to focus less on technicals, more on fundamentals. Okay. How fundamental analysis is useful as a scalper, right, is what we call this thing called known unknowns, right? So let's see if I have it over here. Okay. IronFX, right? Platforms. Economic calendar, right? IronFX has a great economic calendar, right? I want you to take a look at it, right? And this is what I call known unknowns and how you can use it in trading, right? So IronFX economic calendar, right, over here, right? Go close this thing off here, right? Anyway, IronFX has this YouTube live event, live trading throughout the day. Great stuff. Go check it out, right? Some people say they can't see my screen. Are you guys able to see my screen? All right, I'm not sure if you guys are able to see my screen. I'm going to pause for a second here while I wait for your answers. Yes. Are you able to see the IronFX economic calendar screen? Cool. All right. Maybe I was clicking the wrong stuff earlier. All right, but yeah, so this is the economic calendar, right? So let's just say we want to know what's going to happen tomorrow. Let's just say today, right? What you want to look, major thing you want to look at here is volume, okay? Volume. So imagine if I'm trading, right? There's a big news event on here, right? The GFK consumer confidence, right? Let me see if there's any others for today, right? Okay, GFA consumer confidence, right? Dangerous stuff, right? There's a lot of volatility here. If I'm a trader, I'm a scalper, right? I might want to stay out of this currency, maybe the euro, right before this, because I might be right on the trading direction, right? But because of the volatility, I might be wrong, right? Price might spike me out and I might get stopped out, right? So that's a dangerous thing, right? Or that's the important thing about so-called fundamental analysis, looking at the economic calendar and knowing when the big news release is going to happen. For example, the first Friday of every month is non-farm payroll, right? If you were a scalper and you tried to scalp some trades, not knowing that non-farm payroll announcement was going to come, right? You might be correct, but the non-farm payroll just bam, go crazy. You get stopped out and you're like, whoa, what hit me, right? So known unknowns are important to be, knowing when looking at the economic calendar will help you know when these news events are going to come and help you know when to avoid them, right? More important for scalpers. Day traders, the news events are a little bit more important, but it's very, very hard for you to predict, what the result is going to be, right? So as a day trader, unless you're really crazy about econometrics, trying to forecast this kind of data, it's really, really tough to do that, right? What you do well is to also avoid, if your trade is almost at its profit target level and you're reaching a big news event, you might just want to close it off first, right? Because it's not worth it. The big news event might cause price to go in another direction, right? Might go against you, and it's just not worth it, right? You just want to close off your trade first. Okay, so that's the meaning of fundamental analysis is useful, right? But how you actually apply is very different, right? Longer term trading, yes, it makes more sense, right? In our technical analysis and fundamental analysis 101, which we're going to cover in the next webinars, right? I'll actually be showing you a little bit more about how we won the awards that we won by doing combination of fundamental and technical analysis. Very exciting stuff there. Okay. Of course, when it comes to trading, there are fundamentals. Basically, good economy means that money is going up. Bad economy means currency value is going down. Okay. And of course, technical analysis, whole bunch of stuff, but I don't want to focus too much into that. There's harmonics, there's gun angles, there's moving average crossovers and stuff. A lot of stuff that you can do, but some of it I agree with, some of it I don't agree. Gun angles I don't agree with. Okay, it's based off astrology. It's literally you're looking at stars to trade. I believe a lot in harmonics. I believe a lot in Fibonacci. I believe a lot in market structure, correlation, support and resistance, Fibonacci, right? We'll be going through that very, very advanced courses, beginner, intermediate, advanced down the line. I'll be teaching you how to use that to make money, okay? I'll be teaching you how to use that to make money, right? But those will be in the upcoming webinars. Every week we'll be doing it. Sometimes it's me, sometimes it's going to be my other prop traders, Cassandra, and Annabelle who will come and do it. But for starters, right, I'll let you know that fundamentals basically you're looking at the health of a economy. Technicals is more towards this kind of technical analysis. Okay. And the last thing I want to touch on, right, which products should you focus on, right? Now, when it comes to trading, you can focus on a lot of stuff, right? So you notice that, of course, IronFX down here, when you talk about markets, there are so many different markets that you can trade, right? Where is it? You can trade Forex, metals, commodities, indices, futures, shares, a whole lot of different stuff. But remember guys, don't trade for the sake of trading. A lot of people trade for the sake of trading. Why is that wrong? What do I mean by that? Trade for the sake of making money. Trading is just a means to make that money. Okay? If there are no trades, don't trade. Okay, don't trade cryptocurrency because it's exciting. Trade cryptocurrency because it's going to make you money. Don't trade Tesla because it's the talk of the town. Trade Tesla because it's going to make you money. Remember what is your goal when you are trading. Okay, remember what is your goal when you're trading, because this is very, very important, right? This is very, very important when it comes to trading. All right, let me just see. Yes, yeah, it's very important when it comes to trading. You must know your intention. Okay, you must know your intention when it comes to trading, guys. Right? Now, which product should you trade? I'm going to focus a lot more on the liquid on those products which are a little bit more liquid. Right? I'll be focusing a little bit more on Forex. Right? But you can just easily trade Forex and metals. Gold is usually a good one to trade. Right? Forex, right? Usually focus on the majors and the minors. I tend to stay away from the exotics. Indices, really good one is the DAX, German DAX, right? S&P, right? Nasdaq, pretty good ones. Commodities, soft commodities, I don't usually trade it. Shares are actually pretty good to trade, right? But I tend to look at the major ones, right? The big ones, right? I'll be showing you how to look at it in future sessions, right? No worries, Sharif, right? I'm sorry. Yeah, feel free to send the questions now, so I'll answer them before we end off today's webinar, right? But yeah, it's I'll be showing you these are a whole range of stuff you can trade, but that doesn't mean you should trade everything. Okay, guys, don't just jump in and trade everything. Okay, don't just jump in and trade everything, right? I'll be showing you some of the things that technical analysis tends to work better on certain pairs. Fundamental analysis tend to work better on certain kind of instruments. We'll be covering that in the future topics. IronFX will be launching an academy in the next couple of weeks, right? So there'll be a pretty good academy. It'll be integrated maybe with the VIP room, right? I don't have a Forex academy. I don't offer private training, right? We usually are institutions. I work directly with the institution. So usually we're invited guests, like for example, INFX, right? They invite us, a very special partnership with them. Then we come down and we teach you guys. Okay, I don't teach any other courses out there, right? Because I'm a full-time trader myself. I don't have time to teach courses, right? And I don't want to take your money, guys. Right? I don't want to take your money. I'm here on behalf of IronFX to teach you guys. So tune in. Come on, man. Tune into the sessions, right? In the future sessions together. It'll be a fun time, right? It's free and it's very high quality. Okay. It's free, it's very high quality. And yeah, you get to ask me all the questions that otherwise people pay us thousands of dollars per hour just to have a consultation with us. Otherwise, I don't think it's something you want to do, right? Just as long as you're a client with IronFX, you get to benefit this, you get a benefit from this arrangement that we have with them. All right. Anyway, thank you very much, guys, for sticking throughout this webinar. Please, I hope to see you guys tomorrow, right? Yep, you can go and get it on YouTube, Yvonne, right? Please, I hope to see you guys tomorrow in the live.
Beginners. When a trader is tested as you will be if you haven't already, the events will force you to make a decision. Let's say you lose a trade and your trade hits the stop loss. So you made a bad decision. What happens next? Do you trade? Or are you done for the day? Now, the decision will differ from day to day, but overall, the successful trader that's in it to win it, to be glorious, looks forward to trading no matter what happens. The trader is fired up on both the good days and the bad days, but most importantly, he's fired up because he loves to trade. He doesn't love the money potential or the cars, the houses he can buy with the profits. He loves the challenge and the freedom that trading brings you to the table. Choose who you want to be: the average trader, always rushing and making bad decisions, or the smart trader, the student, the methodical trader. Thank you. Paying attention to details when trading. A lot of people try trading for 1 week or 1 month, check the results, see that it's not happening, and then they give up. They go around saying that trading is a scam and it doesn't work. You see, because they can't see it for themselves, they think it's how it is. They don't consider for a minute that they themselves are failing, their approach is failing, not trading. If someone is not happy with the results, you must change. There is no other way. For example, trading under pressure tends to be a bad idea as it can lead to bad decisions. You must place your trades when you feel strong, and you will most probably have to wait to see the results. Some people can't see that trading is a very calculated game and details need to be taken seriously. Details like what instruments do you trade? How aggressive are you when you trade? What's your mentality like when you trade? All these details contribute to your success and your profits. So put down the areas that you will be working to put in more work and more detail. This will help you develop the process and make you understand how much work you must put in to turn Forex into your lifestyle. Thank you very much, guys.